Hello, everyone. Welcome, guys. Welcome, everyone. We'll get started shortly here. Welcome, everyone. Welcome. We'll get started shortly. So, our beginners class. We'll get started shortly. Welcome, everyone. Welcome. Please put your name in the chat as you come in. Welcome, guys. Welcome. We'll get started shortly. Please put your name in the chat as you come in. Welcome, guys. So, our beginners class. And let me know how much experience you have, right? If you have no experience at all, a few weeks, few months, a few years, just put that in the chat for me, please. Welcome, everyone. Welcome. We'll get started shortly. So a beginner's class for beginning traders, all right? We'll get started shortly. The goal is to get you guys some information, all right? Really good fundamentals to start your trading career, all right? So we'll get started shortly. We'll go for about 45 minutes. Get you back to your weekend. All right. So as you come in, just go ahead and put your information. Like I said, how much experience you have trading. All right. And we'll go ahead and get started. All right. So my name is David Stephenson. I am the owner of Monster Trading Systems. I've been trading for about 25 years now, over 25 years. And about 13 years ago, started our company, which is called Monster Trading Systems. And our motto is fire your broker. All right. Fire your broker. So the goal is, right, with us, that you do your own trading, right? You don't rely on anyone else to trade for you. All right. You do your own trading. So we provide you with training, all right, support, coaching to help you with your trading career. All right. So when you guys get a chance, you can go to monstertradinsystems.com and learn about us. All right. So like I said, this is me here. I've started 25 years ago back in college. All right. Started trading, and about 13 years ago, started Monster Trading Systems. And we have hundreds, if not thousands, of students all over the country, all over the U.S. We are located in Orlando, Florida, Winter Park, Orlando, Florida. But we have traders all over the world. They come to us for training, coaching, tools, and so forth. All right. So I've been doing this for a while, so I love working with new traders, right? New individuals looking to understand and trade the markets and make money, right? That's the goal through trading. All right. Now, there's some tools I like to give traders, all right, as you start your trading career. All right. I love reading books. In particular, I've gone through a lot of books on trading. Could you imagine, right? 25 years. So I've seen it. I've seen a lot. All right. But the one book that I would recommend, now we recommend several books, but for brand new traders, all right, this is one of the books I highly recommend. So as a brand new trader, all right, if you guys are serious about trading, All right. If you're serious about trading, this is a must for brand new traders. All right. And this book is called Trading in the Zone. All right. So Trading in the Zone by Mark Douglas. Trading in the Zone by Mark Douglas. All right. Um, we actually give this book free of charge to our coaching students. All right. When they start coaching with us, Trading in the Zone by Mark Douglas. How to master the markets with confidence, discipline, and a winning attitude. All right. So Trading in the Zone by Mark Douglas. How to master the markets with confidence, discipline, and a winning attitude. All right. Now, you don't have to go out and buy this book. So if you go on YouTube, right, type in Trading in the Zone, it will come up. All right. And you can actually start listening to it. All right. So after you're done for the weekend, done with the training here webinar, go on YouTube. If you're serious about trading, all right, start listening to this information. And with trading, guys, it's a lot of what we do is repetition. All right. We do the same thing over and over, but we want to perfect what we do. All right. It's repetition, but we want to get better as we repeat a lot of this process. So Trading in the Zone by Mark Douglas, right? Go on there, start listening to it. And again, we do provide this to our coaching students. All right. Trading as a new trader, trading is not what you think it is. All right. A lot of it has to do with your mindset. All right. A lot of it has to do with how we think about making money. All right. It's very, very different. All right. A lot of it has to do with controlling our emotions. All right. Our emotions when we trade. All right. So, Trading in the Zone by Mark Douglas. All right. One thing I really like about Trading in the Zone is that Mark looks at trading as a game of probabilities. All right. As a game of probabilities, as a game of math. All right. So what we do in trading is we want to have an edge, and our edge is, right, cutting our losing trades quickly. So getting out of losing trades quickly when we're wrong. All right. And then staying in our winning trades as long as possible. All right. So just remember that Trading in the Zone. There's several books out there, hundreds of books out there, but this one here, highly recommended. All right. Every single trader that we've recommended this to, love it. All right. There are other guides that we provide with our coaching. Okay. And as new traders, there's some things in particular, right, we need to understand. All right. The first guide is swing trading. All right. Swing trading. I'll touch on that. The next one is risk management. Risk management. So the ultimate guide to swing trading. All right. Ultimate trading risk management guide. All right. So managing risk. And then the third guide we provide is the ultimate guide to technical analysis. Okay. So swing trading, there are three types of trading. All right. Day trading, swing trading, and position trading. All right. All three of those types of trading works on a different time frame. All right. Now, when I say time frame, a lot of traders think, well, they think of the time of the day. All right. But that's not what that means. All right. The time, when we talk about time frame, we talk about how the candle, when the candle opens and closes, all right, how long that lasts. Okay. So day trading, like most new traders, when you guys come to trade, come into the markets to trade, right? You think of trading as day trading, but there's more to that. All right. Day trading is perhaps the most difficult type of trading. What we like is swing trading. All right. So think of day trading as intraday, where you're going to get out, all right, get in and get out of that trade, all right, during the day. So we're not carrying that trade overnight. All right. So day trading, just think of it like this. Day trading, we're going to get in, get out for that day. Swing trading is we're going to hold that trade a bit longer. All right. We might hold that trade a few days, a few weeks, and then position trading. Those are the three types: day trading or intraday trading, swing trading, and then and you guys, if you have any questions, just put it in the chat or raise your hand, and you can speak to me. All right. And then position trading. Now, day trading, just think, if you're going to trade day trading intraday, you need to trade on a 30-minute time frame or less. So 30 minutes, 15 minutes, 5 minutes. Some traders even trade on a 1 minute, right, time frame. That, I think that's crazy. All right. Swing trading, that's a 60-minute or higher. So a 1 hour time frame, or very popular, or a 240-minute time frame, which is very popular. So 1 hour, all right, 60 minutes, a 240-minute time frame, or a 4-hour time frame. All right. Once we get into position trading, we trade on a daily time frame, meaning your candle is going to open and close for that day. All right. But on a day trading, position trading on a daily time frame, we could hold that trade, all right, several weeks, several months, if we're really lucky, even several years. All right. And then risk management. The way we want to look at risk management is how we manage your capital. All right. So I've had traders come in where they're trading 80, 90%, 70% of their capital on one trade. All right, which is not what we want to do. So we want to risk a small amount. All right. And we want to have big rewards. Okay. So small risk, big rewards, big gains. All right. And we can also manage risk by how we enter the trades. All right. And I'll talk about this. All right. So we can use support and resistance, all right, to manage risk. All right. How we enter and how we exit the trade. A lot of traders don't think about that, right? When they think about risk management, they just think about how much money I'm going to trade. But we can manage risk, okay, by our entries and our exits, how we enter and how we exit. Okay. And then technical analysis. All right. The ultimate guide to technical analysis. All right. There's two schools of thought out there, right? Fundamental analysis and then technical analysis. All right. Fundamental analysis, we believe as technical traders, which is what we do, all right, that the news, right, earnings, all of that is data, right, is built into the price. All right. It's built into the price. So rather than following the news, all right, rather than going on CNBC or whatever, right, and following the news, right, we can analyze the price and have a lot of success, right, just analyzing the candles, right, analyzing the trends, all right, through technical analysis. All right, we go one step further with technical analysis. We go one step further where we actually provide buy and sell signals, all right, for our traders using what we call trading systems. All right, trading systems. Okay, all right. So by far, all right, by far, this is the first, perhaps with traders, new traders, the number one question I always get from traders is, hey, David, where do we enter and where do we exit our trades? How do we enter and then how do we exit our trades? Okay. Support and resistance. If you guys have heard of support and resistance, that's how we buy and sell. All right. So support and resistance, the keys to your success. Okay. So what I would like you guys to do is take a picture of this. All right. Take a picture of it. All right. I tell traders to print it out, laminate it. All right. When you get a chance. Okay. So let's go through it. Support and resistance, the keys to your success. All right. The keys to your success. All of your buying and all of your selling will come right with support and resistance. Okay. So just remember, all of your buying and all of your selling will be done at support and resistance. Okay. Support and resistance is made when the price, so look at the right here, these lines, that's your price line. right here. When it reaches a high, that's resistance. All right. So when it reaches that high many times, like here, 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 and here, that's resistance. All right. So think of resistance as your ceiling. All right. That price can't get through. And then the support, same thing. If it touches that area, that level down there, support, think of support as your floor. Price can't go any lower. That's support. Okay. So we do not trade between support and resistance. Right? As new traders, I know it's taught out there that you can buy at support, sell at resistance, or buy low and sell high. We don't want to do that. All right. We want to wait, all right, for the price to break resistance to then enter buy. Okay. So we always want to buy when the price breaks resistance, sell when the price breaks support. Okay. We're going to buy when the price breaks resistance because the buyers are now in control. Okay, so support and resistance, the keys to your success. You guys have to notice. Okay, you have to notice as new traders. All right, we're going to buy on the break of resistance, sell on the break of support. We're going to buy on the break of resistance because the buyers are now in control. All right, and I'll give some examples of that. The buyers are now in control. We're going to sell on a break of support down here, this red line. All right, because now the sellers are in control. All right. So if we go here, all right, next chart here, the 4 market phases that every trader must know. 4 market phases that every trader must know. And as new traders, as traders in general, right, you have to know this. Okay. Take a picture of this. Like I said, you can laminate it or a screenshot, laminate it, print it, laminate it when you get a chance. Okay. So the 4 phases. All right. Accumulation is phase 1 down here. Phase 2 is the markup phase. Phase 3 is the distribution phase. And then phase 4 is the markdown phase. All right. Between the phases is where we have support and resistance lines. Okay. Now, the accumulation phase will always come in at the bottom of your chart. All right. So on the price chart, it will always come in at the bottom. All right. Every stock, every Forex pair, every futures, every crypto will go through this phase on different time frames. Okay. All right. So accumulation, phase 1. Let's go through it. Phase 2 is the markup phase. Phase 3 is the distribution phase. Phase 4 is the markdown phase. All right. So accumulation phase, phase 1. All right. What happens is this, right? Price fell, right, from let's say $300 up here, fell to about $50. And what's happened is that the institutions, big hedge funds, are building positions. That's why it's called the accumulation phase. So they're buying low, buying low, buying low, all right, before they take the price higher. So while they're buying here, right at that accumulation phase, we are holding and waiting. All right. And we are waiting for them to finally move the price higher to break resistance. So we would enter here. All right. Once we buy here, right, that's basically our trend. That's called the markup phase. All right. So that's when we should be buying. As new traders, we don't randomly buy. All right. We're going to buy when the price breaks resistance. Right. Within the markup phase, right, price will slow down, doesn't go up forever, right? Slow down. All right. New buyers enter the market here on a break of resistance here, this line right here. That's called reaccumulation. So that's new buyers entering the market. All right. When the price can't go up anymore, all right, breaks support right here, breaks support right here. If you guys can see my cursor, let me know. Break support right here. We're going to exit. All right. So that's phase 3, distribution phase. So we would have bought here, sold here. All right. Now, we would have bought here on a break of resistance, sold here on a break of support. So write this down. We're always going to buy on a break of resistance, sell on a break of support. We don't randomly buy just because we like the stock or someone give us a tip to buy, right? We buy when the price breaks resistance, sell here when the price breaks support. All right. Once the price breaks support, right, that's called the markdown phase. So now sellers are in control. Sellers are in control here. Buyers are in control here. So we should be buying here, buying in the markup phase. Markdown phase, we should be out of the trade, out of the market. I'm waiting to buy again. Within the markdown phase, we have redistribution. All right. So new sellers are entering the market. All right. To push that price a lot lower. Okay. So just remember, we are waiting here in the accumulation phase, waiting. 80% of the time, guys, as traders, we are waiting for setups. All right. We're waiting for setups patiently. All right. When the price breaks resistance, we're going to buy. That's the markup phase. We can add to our position in the reaccumulation phase. When the price breaks support, we are going to exit close. All right. So again, remember, we're always going to buy on a break of resistance, sell on a break of support. So you guys have to know this as new traders. All right. This is what I call your roadmap. All right. This is your roadmap. You must know this. So support and resistance. All right. We start with support and resistance. We're always going to buy on a break of resistance, sell on a break of support. All right. But then we have to follow a plan, a roadmap, which is the 4 market phases that every trader must know. All right. Once the price gets into the markdown phase, all right, we're out of the trade. Remember, we buy here on a break of resistance, sell at the break of support. We call this the meat of the trade. All right. I know as most traders, new traders especially, we want to get the whole trade, all of the trade. We want to get the very bottom and we want to get the very top. All right. That's not going to happen. All right. It's just not going to happen. This is seller's territory. This is buyer's territory. All right. So we need the price. We need buyers to come in here and sellers to come in here to get out. Buyers to come in here on a break of resistance to get in. Sellers to come in on a break of support to get out. Okay. Now it doesn't stop there. All right. And if you guys start looking at charts, you will start to see this, right? On every time frame, all right? You will start to see, notice, and this will make you such, we teach traders about this, and within a month, we have traders who have never traded before, right? Understand the markets better than traders who've traded for 10, 15 years not having this information. This is a powerful tool, very powerful piece of knowledge. Okay, so now it starts all over again. So there's only 4 phases we need to remember. All right, there isn't a 5th, 6th, 7th, 8th. All right, it doesn't go on forever. Only 4. So accumulation, markup, distribution, number 3, markdown, number 4. Within the markup phase, we've got reaccumulation. So new buyers enter into the market. So we can add to our position. That will give us confidence, right, with our current position. And then the markdown phase, phase number 4, markdown phase, after the distribution phase, new sellers coming into the market. So while most traders are losing money over here, we are out or short. We can short the market, all right? But we can wait patiently for the next accumulation phase to now buy again. Okay, and that's why I mentioned a lot of times 80, 70, 80%, sometimes even 90% of the time, we are waiting patiently for setups, right? Based on the 4 market phases. All right, so very important, 4 market phases that every trader must know. All right, very, very important, very critical. All right. If you guys have any questions on this, let me know. This is important. All right. So your buying and selling will be based on support and resistance. All your entries, we're going to buy on a break of resistance, sell on a break of support, wherever support comes in at. All right. All of your buying and selling will be based on support and resistance. We don't buy at support and sell at resistance. All right. We do not buy. I had a coaching yesterday with this trader, first time coaching student, and that's what he was doing, buying on a break of support, buying at support and selling at resistance. Okay, that's not what we do. All right, we want to buy on a break of resistance and then sell on a break of support. If the price broke support here, we would get out here. Right, if it continued to break resistance and move higher, right, we would just continue to move higher. Whenever the price breaks support is when we would get out. And the goal is we want to take small losses, big wins. Okay. And again, it starts all over again with the accumulation phase. All right. With the accumulation phase. So only 4 phases. Okay. All right. Now, as traders, the way we make money is by following trends, whether it's a small trend, a big trend, right? Small trend meaning the trend only lasts a day, or a big trend where it lasts, a few weeks, a few months. We need trends to make money. All right. We need trends. That's why day trading is very, very difficult. Okay. Because we need the trends. The goal in trading is that we want to take small losses, big wins. All right. So we can have 9 losing trades, 1 profitable trade. And that profitable trade can pay for all our 9 losses. So when you guys go through the book, Trading in the Zone, right, Mark Douglas will talk about probabilities, right? Trading is a game of probabilities, all right? So it's a game of math. So if we have 9 trades and we are able to cut those 9 trades, right? Cut those 9 trades. Small, get out quickly. When the price breaks support, okay, then we're going to take small losses. If we let it run into the markup phase, keep breaking resistance, new accumulation, right, phases, then we're going to maximize our profit. And our big profit will pay for our small trades. All right, small losses rather. And we do that by trend following. All right, so take a picture of this chart also. Like I said, I'm very visual. I'm very visual. All right, this information here, you want to take a picture of it, screenshot. All right, and I like to say laminate it, keep it. Okay, so we're never going to buy at the bottom. Our entry will be right here on a break of resistance. That's where we're going to enter. That's where we're going to buy. Okay, we can buy down in this area here. That's near support. All right, sellers are still in control. That's the markdown phase. Okay, we'll never sell at the very top. All right, because that's the markup phase. We need confirmation that sellers are in, right, when the price breaks support. Okay, so we're going to enter here on a break of resistance, sell here on a break of support. We call that the meat of the trade. All right, right here. See that here? The meat of the trade. All right, we don't want to get too greedy. We're not going to get the very bottom. We can't get the very top. All right, we're only going to get the middle part here. From here to here, we call that the meat of the trade, trend following. All right, now we do have some coaching available. All right, so coaching. So if you want coaching, just get with me. All right, just get with me. I'm going to open the floor for some Q&A. All right, so Q&A, and while I'm doing some Q&A, all right, I want you guys, I'm going to go through some examples. Okay, so don't be shy. All right, so as I go through some examples, real live examples, okay, I'm going to open up the floor for questions. Okay, all right, so I'm going to go through different charts here. Okay, while I do this, who here has more than a couple of months of trading experience? Who here has, or just give me an idea of how much experience you guys have. If you don't have any experience, few weeks, few months. All right. No experience? Okay. All right. I want to show you guys why this is important here. All right, Lisa, a few years. All right. All right, but a long time ago. Okay. All right. So, have you heard of support and resistance, Lisa? Did you hear? Have you heard of support and resistance in the past? Just let me know. I'm going to randomly go through some symbols here. And what we're going to do is we're going to find support and resistance and the 4 market phases. Okay. So this is some stock. This is one of our trading systems here called Stock Boss. So we're just going to look for some stocks, right? Stock market isn't healthy right now, so we don't have a lot of stocks, but I'll find some examples. Okay. All right. Now, if you guys, I'm going to ask you, but I'm going to go through this. Okay. Oh, okay. Good, Lisa. Good. I'm going to go through these, but I'm going to ask you guys also. I just want you to think of the 4 market phases. We're going to go through a few of these, and then we'll be done. I'm not going to keep you guys. I know it's Saturday here. All right. So these green candles here, all right, these green candles are buyers. All right. So I want you guys to think of these green candles are buyers. Red candles are sellers. So we talked about buyers and sellers. We're going to buy on a break of resistance, sell on a break of support. Okay. So these red candles are sellers. Just think red, right? Price is going down, sellers. Green candles, buyers. Okay, I'm going to show you why this is important. White candles, neutral, right? So no one is in charge, right? Right. So white candles, just think buyers are not in charge, right? Sellers are not in charge, right? We're neutral. Okay. These purple support and resistance, we have purple support and resistance and yellow support and resistance. All right. When we have yellow support and resistance, just remember we should be in the markup phase, purple support and resistance in the markdown phase. All right. So I want to go through a few of these. Okay. And what I want you guys to pay attention to is how sellers and buyers react to the price. Okay. Sellers and buyers react to the price near resistance and support. Okay. Near resistance and support. All right. So we're taking the 4 market phases. We're taking support and resistance. Okay. And we're going to chart it. It's not live now. The market closed on Friday. Okay. But it is real data here. Okay. So follow me for a second. Okay. Here, these blue arrows here, and I know it's hard to see, but this blue arrow right here, and this white arrow right here, this blue arrow is our buy signal. White arrow here is our sell signal. Okay, blue arrow here, buy signal, right? White arrow here is our sell signal. All right, so the price broke resistance. So buyers, right? Price broke resistance. Buyers are now in control. So we had a signal here to buy. Big candle, big buyers. Whenever these candles are long, we have big long candles. That's big buyers coming in, just like here, right? Those are the big institutions, big banks, big money managers pushing the price higher. Okay, as retail traders, we don't trade enough volume to push the price like that. That's big traders. So just remember, when the price breaks resistance, there's a good chance that big buyers, big banks, big institutions are now getting in. That's why we want to get in when the price breaks resistance. Okay, in this case, broke resistance, came back down, hit support. This was our exit. So we bought here, sold here, got out here. So we took a loss here. All right. We call this a managed loss. All right. Right. We took a small loss here. But look what happened to the price, to the sellers after the price broke support. It went down further, guys. Look at that. So it went down all the way. So we bought here at 674. All right. Got out here when the price broke support at 497. But look here, it dropped all the way at 61 cents. All right, let me repeat that. We bought here, all right, at $6.74. We were forced to get out because the price broke support. We can't control as traders. Just know you have to be flexible because we can't control the price, right? Price is going to do whatever it does, right? Our goal is to manage the process, manage our buys, manage our sells. All right, so we got out here, took that loss, but look what happened to the price after we got out at 497. All right, fell all the way down. Sellers are in control. All of this is called the markdown phase. Okay, that's the markdown phase. Markdown phase. All right, fell all the way to 72 cents. So we were out of this. All right, we were totally out of this. Now look here for a second. All right. All right, so let's go along here with price. So it's falling. All of this is the markdown phase. All right. And then we waited until right here. We have the accumulation phase again. Remember, after the markdown phase, there's only 4 phases. Then come the accumulation phase, okay? So here we are in the accumulation phase. All right, accumulation phase. All right, so we have new support and resistance here. Right, green candle, buyers jumped in with a big green candle here, which is a buy signal. All right, so we bought here, went all the way up and got out here. So we bought at 142, got out here on a red candle. Sellers are now coming in, breaking support here. We got out at 524. All right, so we now out. Look at this. See how we do this? We now out. Right, this is the markdown phase. This is the distribution phase. This is the markup phase. So now we're out. So we're not just randomly doing this, guys. We're following a systematic process. Look, so this is all the markdown phase. So as we got out here, right, at 531, right, price is moving lower, so we're out. Okay, we're out. This is the markdown phase, right? We have another accumulation phase. All right, so here is support. Here is resistance right here. Look at this. This is pretty cool. So we have managed losses and managed wins too. So here, price broke resistance right here. Buy signal came in here, right? This blue arrow buy signal failed, broke support. We got out here, took a small loss. So we get small losses, right? Big wins. And then here, price came down, all right? We waited. Price broke resistance again, all right? We got back in. Every time the price breaks resistance, we are going to buy. Every time it breaks support, we are going to sell, like here, okay? Here, broke resistance, we got in, okay? So we bought at 251. Price broke support right here. Red candle, sellers came in. We got out. So we bought at 250, 253, got out here at 405. All right. Waited. Price broke resistance. We got a high resistance up here. High resistance up here. All right. And now we got another buy signal to move higher. Okay. So if you guys look here, we have a big win, small loss. Big win, small loss. We are out during the markdown phase. All right. So during the markdown phase, we are out. Okay. During the markup phase, when the buyers come in, we are buying. Markdown phase, we are out. All right. We tested, failed, broke support, right? Buyers weren't ready, quite ready. Now here, right, buyers came in again. We bought on a break of resistance, cut a nice trade here, right? Sold on a break of support. Buyers are now back in. We are buying again. Okay. Now this is just one random stock. Okay. Just one random stock. We can do this. You guys will find the 4 market phases in every stock. Here's another stock. All right. Accumulation, markup, distribution, markdown. We would have bought here. We bought here on a break of resistance. Buyers are in control, green candle. Sellers came in, red candle. All right. Sold here, markdown phase, we're out. And then we did it again here. All right. So we can look at every chart. So that markdown phase, markup phase, buy on a break of resistance, it works. And it works really, really well. Here, we bought here, right? In the markup failed. Buyers came in, failed. Red candle, broke support. We got out before this loss here. Look at this. All right. We got out, got in at 418, got out at 386. We'll take this loss. All right. We'll take that loss rather than letting it drop all the way to 63 cents down here. All right. So we'll take that loss, very controlled loss. But guess what? When buyers come in again, which they did here, right? We buy here at 150, and here it is now at 364. This profitable trade will pay for this losing trade here. All right. So where most traders, guys, are sitting in this, when it's going down in the markdown phase, if you're not aware of these 4 market phases and you're waiting patiently, right, for your trade to come back, just know it might not come back. All right. Or it might not come back when you want it to come back. Okay. All right. So these are just some examples. So what we've done is we've automated that process. We've automated support and resistance. We've automated the 4 market phases. It's that important. Okay. It's very, very important that you guys follow support and resistance and the 4 market phases. All right. But most importantly, you want to get your mindset right. All right. With trading in the zone. All right. Trading in the zone. Okay. All right. All right. We're going to end here. All right. We're going to end here. If you guys want any coaching, you should see coaching available. If you want any coaching, just let me know. Our website again, okay, is monstertradinsystems.com. All right. monstertradingsystems.com right here. I recommend you guys go to our website. All right, go to our website, look through some of the testimonials, what traders are saying about um, um, the four market phases. All right, support and resistance. Right. Oh, now, those are the foundations, right? We get more advanced than that. But as new traders, that's the basics that you need. Okay. All right, guys. Thanks for coming. Thanks for coming. Thanks for taking your Saturday. All right. We do evening classes too. So every evening from Sundays through Thursdays. All right. We do a market update every evening. But keep coming. Make sure if you want to trade, all right, if you've tried trading before and it didn't work out, all right, or you know folks that tried it, we do things a bit differently here, all right. A lot of our successful traders follow that process, support and resistance, and the four market phases. Okay, the goal in trading is not to make millions of dollars. I know new traders want to come in, make millions, hundreds of thousands of dollars. No, your goal is for clarity. All right, for clarity, understanding how markets work. All right, we keep it simple. All right, so that's your goal as new trader, just to understand and then implement the process. And then with that, hopefully, you'll do well financially. All right, guys, take care. Have a great weekend. Have a great weekend. And if you guys need me for anything, I'm always available. All right. My phone number is 407. Write it down. All right. 407-733-0185. Best way to reach me is through a text, and I'll get back with you as soon as possible. All right, guys, take care. All right. Thanks for coming. Thanks for coming. Hope you guys got some good information today. All right. Take care. Bye-bye.